have the weekly price chart for Micron Technology Incorporated, stock ticker MU. As we can see here, the stock is posting a fairly strong recovery after posting a much more significant price decline toward the downside direction. So what we're currently dealing with is a bit of a reversal zone on the weekly chart. And for this reason, we do need to sort of take a step back here, take stock of the entire situation, and identify some important support and resistance levels that can be used for real-time trades for this stock going forward. So as things currently stand, if anybody that was watching my prior video on this stock, we can see that I had outlined, I left a lot of the same chart markings here so that we can see that the prior price zone that I was watching came in at the 61.8% Fibonacci retracement of this dominant trending move, which began during the December 2022 trading sessions. This low would have come in at roughly 48.50, and then the price acceleration here resulted in ultimate price highs coming in at this would be 157.54 during the June 2024 trading period. So this was a very significant move higher. But then anybody that was watching the stock does understand that this June-July trading period was incredibly impactful for anybody that was trading the stock from the long side. So as we can see here currently, if we're using this dominant trend move as the most influential wave, momentum wave governing the stock currently, we can see that the level that I was pointing to previously came in at the 61.8% retracement, which is found at roughly $89.60. As we can see here, the ultimate price low did come in a bit below here. We are looking at a weekly chart, so if we even minor breaks here can be a few dollars in size. So as we can see here, for the most part, this area did hold. You could call this a break to the downside because we did ultimately see price lows coming in below $85, $84.91. But as we can see here, there was a very strong reversal to the top side. So if anything, I would be calling this a false breakout to the downside rather than, an influential downside bearish breakout that governed prices and sent the stock lower. So as we can see here, the main reason that I was pointing to this area came from the fact that this is a very important Fibonacci level. But then in addition to that, we also have this rising 100-week exponential moving average, which is this purple line here, coming into direct contact with this trading zone. So when I see a combination of factors like that, lights, warning signals go off, lights go off, bells go off, and you start to look at these types of areas as a potential reversal point. So as we can see here, this did come to fruition. You could make the case that we did see a bit of a downside price move here, roughly $5 lower below the 618 retracement. But you also have to keep in mind the fact that the 100-week exponential moving average does not exactly line up with that same area. It's not exactly coming in at 89.60. So we do have to give a little bit of leeway here in terms of the potential price movements to the downside. But anybody that took this trade from the long side using the 618 retracement as the basis for the trade would have been able to maintain the position as long as the stop loss was wider than $5, which it really should have been given the fact that the upside price moves here would have been, the potential for upside here was quite substantial. So if you are looking at a $5 trade to the downside, possibly a $5 stop loss or something like that, you'd be looking for at least $15 in share price gains. But as we can see here, we're already close to roughly $25 in share price gains. So at a minimum, the stop loss for this type of trade should have been $5. And as long as that's the case, the trade is actually able to stay intact because we didn't even see a full $5 price movement to the downside. So as things currently stand, this is a very clear reversal pattern within the candlestick readings themselves. What we would really like to see here would be a break above this prior price candle. So essentially this would mean that we would like to see prices move back above roughly 111.40, because if that were to be the case, we would see a green bullish candle here that is roughly equal in size to this prior bearish candle. And then you have, this period of indecision, this reversal point, which came in right around the $89 mark. And then this would set the stock on a very strong path to continue moving forward. All of that said, we do have to consider the fact that readings in the relative strength index are not yet overbought. So currently, if we're looking at the weekly chart, the relative strength index is hovering right around the midpoint of the histogram. Specifically, we can be We can see that the RSI is trading right around 49.50. So we're not even really at the midpoint just yet. And ultimately, this does suggest that the stock could trend much higher before running into major resistance levels. If we're looking to the top side, one area that I would be watching as a potential resistance zone comes in at roughly 127.27. The reason that I point to this level is because it does mark the prior price low, which posted during the July 1st, 2024 trading session. That doesn't exactly match up with this 23.6% Fibonacci retracement that I have outlined here. But as we can see here, the prior trend low, this initial movement lower, did result in price lows that came in at 127.27. So first, what I would expect to see would be a bit of resistance to be found roughly in that area. We do have some work to do before we get to that point. We would have to break through the 20-week exponential moving average, which is currently found right around 113.35. So this could be a bit of a headwind here, and it's not so far away from prices currently. But I don't expect this area to be a hugely, massive, strong level of resistance due to the fact that there are no other historical price zones that are coming into confluence with this area. So as we can see currently, there is some resistance here to the top side, but it's somewhat thin and it's kind of singular in nature. We're not seeing many, we're not seeing a confluence of resistance factors here that are forming in the same zone. Not in the same way that we did see support factors that were forming right around the $89 level. So overall, this does support the potential outlook for the stock going forward. That does not mean that we can't see a bit of a retracement here. You need to keep in mind that this was a very strong reversal to the top side, and there is still a lot of negative momentum that is governing this stock. Even if we pull out to the trading volumes here, we can see a lot of red here on these trading volume bars, and some of them are quite substantial. So we were seeing a significant amount of selling pressure here in this stock. So to expect that to just simply disappear would be a bit naive and somewhat irresponsible for anyone that is currently in a long position for Micron Technology Incorporated, stock ticker MU. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.